Section 28A of the tax code, better known as the Augusta Rule, or as I like to call it, the rent your own house to your business tax-free rule. See, you can get income from your business to come to your pocket and not have to pay taxes on it. That's pretty interesting, right? So first off, let's talk about this thing. Why is the Augusta Rule important? The Augusta Rule is important is because this is a tax loophole that very many people miss out on because they just don't know how to do it. Maybe they've heard about it, maybe they've thought about it, maybe somebody shared about it, but they're like, well, actually, how do I do this, David? And how do I know I could qualify? Well, let's talk. So the first thing you must know is the Augusta Rule was founded because in Augusta, Georgia, where there's a huge golf tournament every year, some people lobbied to Congress and said, hey, we want to be able to rent our houses out during this tournament because, well, a lot of people come visit here and we don't want to be here anymore. Can we rent out our houses? And somebody in Congress who was really rich and probably had a house in Augusta, Georgia, said, we should vote for this. And they voted and passed it and it became a tax code. And this tax code now allows people in Augusta, Georgia to be able to lease out their house during this somewhat of a holiday in their area, which is Augusta National Tournament, whatever it is. I'm not a golf guy. But when they do this, they allow them to rent their home up to 14 days and whatever income that they receive from the rentals is completely tax-free. Now that's cool to them, but what about us? Well, the government says, well, we'll allow you to do the same, but you got to rent it to a business that needs your home for the purposes of conducting business. So that could be yours. Now, some important things to know is that it's 14 days total. You can't go past 14 days. The next thing is you must rent this to a business. So you have to actually have a business, not a sole proprietorship. This must be an S Corp, a C Corp, or a partnership return, something that can actually claim it. So the rule would be it has to have an EIN and they must be using it for business purposes. Now this can't be for just parties or get-togethers, maybe corporate meetings, maybe a retreat for training. Maybe you're going to be recording content for your business, or maybe you need to have some special meetings with individual team members. All of these are reasons to be able to rent your home. Now you're probably wondering, well, how much can I possibly take? There's a few ways to do this. Number one, you could call local meeting spaces that are in your area and ask them how much for a daily rate, and you could use that as your basis and multiply that times the days that you're going to rent your home. The next way you could do it is to go to, let's say, Zillow and get the fair rental value of your home, and I would probably take about 20% of that. So if, let's say it was $2,000, then we would say 20% of 2,000 would be $400. So you get $400 times the number of days that you're going to rent your home out. So 14 days total, so you could probably do one a month, or maybe during the Christmas holiday, maybe you need to have your annual retreat to be able to get your team ready for the new year. These are things that you can do. Now, if I were you, I'd be thinking about this right now as we approach the end of a tax year to make sure you maximize this as a deduction. And the last thing you're probably thinking right now is, how do I record this? Well, just make sure whenever you do have these meetings at your home that you document it. Maybe records, maybe meetings, maybe minutes from the meeting, maybe the agenda from the meeting. See, at our office, what we do is we give our clients the actual minutes that they're going to need to follow in order for them to have an actual proper board meeting or a retreat meeting. We provide agreements like lease agreements to our clients to make sure that they have these things as supporting evidence. And then how do they report that on their bookkeeping is, of course, making sure you notate it in your bookkeeping properly and then taking the funds out of your company properly. This is very important because if you don't do these two things right, you could put yourself in an audit situation. Now, just so you know, because this is a large sum of money, you are going to have to report it on your tax return as income, but don't worry, with the right tax professional, they'll be able to zero that out and it'll show it as no income at all, and your company will get the deduction and you'll get tax-free money. So the IRS code 280A is one of my favorite codes to use because obviously I want to rent out my house every year to my company. I want to make sure I get that tax-free money. I want to take that money and I want to go on vacation or invest it in real estate. One or the other is going to happen for me. I hope this video served you well and I hope you take advantage of this. Work with your tax professional today to maximize every single tax deduction so you can join the 3% Club, which is the 3% of Americans who make over $250,000 a year who do not pay any taxes because you deserve it. And if you like content like this and you want to have more of it, please subscribe to my channel where I drop things just like this every single week for you to maximize and build your own economy.